giving a huge peak potentials welcome for Miss Joan Perry.
Thank you. Thank you. Thank you. Thanks. Thank you. Thank you. Thank you. Thank you. Thank you. Thank you. No. I feel your generosity and all that clapping. My wish for you is you'll take that out into the world as you go. And my wish is that you'll feel my generosity as we go through this performance. Because I truly care that your money does good things for you. In fact, my hope and my wish is that money will go with you to greater heights, and that money will be your friend. How many of you feel already that money is your friend, and how many of you would like money to be your friend? Yeah, because money is simply an energy. You know, sometimes I hear people say, I spoke one time and I said, would you like to have more money in your life? And this person said, well, not really, because if I had more money, I would move from the middle class to the upper class, and then I would have to have more responsibility. Well, saying you don't want more money in your life is a little bit like saying you don't want more love in your life, because money is simply an energy that you have a great opportunity to do good things with. And our job here is to pick those best strategies that can enable your financial well-being to its highest level. Anybody for that? Yeah! How many of you have IRAs, RRSPs, retirement plans? Yeah. Now, I'm not going to ask you to raise your hand for this question. How many of you are down 30% this year? Yeah, you can just nod on that one. It's not a good feeling, is it? And see, the important thing about money is money should give you a good feeling in the pit of your stomach. That's the whole point of it. If something is giving you a bad feeling about money in the pit of your stomach, then it's time to change that. Because money should give you a good feeling. It's an energy, it's a resource. Now, if you'll put the first slide up, 700 billion. Is that a big number? If you take the population over 85 and you divide it into that number, that means that everybody would get $350,000 in a check to them. Now, wouldn't that have been a good idea? Yeah. Why to some corporation? You could pay off your mortgage, you could pay off your credit card, $750,000 to you, right? Sound like a good plan? These are all the things you could do. Pay off your mortgage, pay credit, create jobs. It would truly create economic boom. Because the more money that's in your hands and the more money that you have in your investment account, the more you can help to feed the economy. We really need to think differently. It's not a good plan that there's so much conversation now on the news media about how so many Americans and Canadians are losing so much money in their investment accounts. And the biggest investment account is your IRA and your RRSP. So in this discussion today, I'm asking you to focus on those accounts, because I'd really like to get you up off the couch and really paying attention to these monies right now. Because as we know, they have tax advantage for you to use them. And at the same time, I'm going to give you just a little bit of a mathematical equation here. If you take the number 72 and you divide an interest rate into it, so let's pick 12%. That's the historical rate of return of the stock market. Your money should double every 6 years. Does that make sense? Okay. Now, if you're using a savings account or a money market account, let's divide 2 into 72. 36 years for your money to double, right? If you're starting at 20, that may be a possibility, but if you're 55 or 60, that's not a possibility. Let's do it worse. Down 30% this year into 72. What does that give you? No. Negative into 72 is really, really not a good idea. So I'm going to talk to you about what we do when it looks like this. So these are the major indexes from January until now. The Dow Jones, the most familiar index, that comprises a small basket of stocks, and the Dow Jones is a way to evaluate the market and what those stocks have done. The NASDAQ's the next, mostly high-tech stocks, a little bit bigger portfolio of stocks. The S&P 500, a little more mid-cap, again, 500 stocks in that. And the Russell 2000, which happens to be one of my favorite focuses in the market. But you can see in all these indexes what's happened. Down and down and down and down, okay? Now let me ask you a question. What is it that made you stay planted in those investments when these markets were going down, 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 down? Okay? If you missed it in January, okay. You missed it in February, okay. You missed it in March, okay. You missed it in April, okay again. You had June and July, way out here. My point is that you don't have to figure out market trends when they are very first happening. Warren Buffett says he never gets it on the bottom and he never gets it on the top. However, there's been a long period of time here to figure out that this is a declining market. And how would you do that? If you go to any of these sites and you type in those symbols below, the Dow, the NASDAQ, the S&P, and the Russell, you can get a chart, and you'll start to see what's happening in the market. And that's your indication of how you should be looking at your money and what's happening to it as it's invested out there. These are sort of the global things that you look at. So every day, I'm looking at these charts to see what's going on in the overall market. But I'm going to explain some other features to you. Markets are like the ocean. What do I mean by that? You know how the ocean comes in like this, and it goes out like that? But it doesn't. The markets and the ocean come in like this, right? And they go out the same way, with a swirling motion as well as an in and out motion. So what does that mean? When you're watching the market decline as it has this year, the markets didn't just go boom, 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 did they? No, they kind of confused you along the way. They went boom, boom, boom. In other words, they've taken some ups and then some dives, and up and down. So if you're casually looking at it by just, say, listening to CNN or something like that, you're going to hear up days and you're going to hear down days. But when you put it all together, you start to see that there's a pattern. And you'll want to write this down. Markets trend in a pretty intermediate pattern. What I mean by that is that markets don't change in up and down